Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to Uncontested Investing. I'm Tim Harridge. Thank you so much for stopping by. Today, I am with a local Dallas-Fort Worth real estate agent that my wife kind of fangirls on. And I've started following on TikTok. I'm kind of become a fanboy. So Lacey, thank you for being here.
Thank you for having me. I appreciate it.
So I like to just let everybody kind of tell the audience a little bit about themselves to start out.
Sure. I have been in real estate since I was probably about 10 years old. I was sweeping floors for my dad in his commercial warehouses while listening to Nirvana on a Walkman CD, so that way I can age myself appropriately.
Well done.
Thank you. Picking up cigarette butts around the area, sweeping, doing roof repair, and then I kind of slowly graduated into property management for him. Went to SMU here, and then when I graduated, it was 2009, and I decided that would be a great time to get into real estate. So I've been doing investor real estate for the last decade or so.
So in 2009, I was trying to get out of real estate, very unsuccessfully. But everyone I know that entered in 2009 has really, one of my great friends, he said, I was, naive enough to not even understand how bad it was. He said, and since I learned then, for the last 13 years, it's just been getting easier and easier. I was like, well, I almost had to file bankruptcy, but I didn't, so thank God. So first segment every week is what I call the bottom line up front. So when I was in the Marine Corps, we would brief these generals and stuff, and opposite of sales, they were like, never bury the lead, say the most important thing, in case the generals have to get up and leave sometimes. So I want you to take up to 2 minutes and just tell the audience kind of the most important things that you see going on in the market today, maybe things you think people should be focused on, maybe things you think people should be avoiding, and just because, people also, almost a summary of what we'll talk about for the next 30 minutes.
Sure.
Good to go?
Yes.
Go.
I have a hot take on what I think a lot of people should be concerned about, and it comes from the World Economic Forum. I am incredibly fun at parties, so I watch the World Economic Forum whenever it happens. And this most recent forum talked about real estate investing. And one of the things that it discussed is that very soon, I would say within the next 10 to 15 years, individuals in cities like Dallas, Austin, San Antonio, New York, San Francisco, Los Angeles, San Diego, Chicago, Atlanta, Miami, will no longer be able to purchase homes. They will be in a rent cycle. Part of that is because of the very large inflation that we saw on prices. Another part of that is because the majority of properties that were purchased over the last 3 years were from companies, LLCs, corporations, hedge funds. Their goal is to make sure that they have something that is more profitable to sell to their clients. This includes houses that have tenants inside of them being sold as a very big package. When Zillow went out of business and they no longer decided to do flipping houses, they did not sell it to a third-party market, they sold it to hedge funds. This same thing will occur. This is a problem because wealth transfer is one of the largest pluses of real estate and owning real estate. It's about making equity, it's about changing your family's life, it's about giving generational wealth, and it is the largest tool for that. It's one of the only things that you can do by putting 3.5% down and turning it into $1 million investment about 5 years later. So the goal that I think people should be thinking of is no longer whether or not the time is to get into the market, because the time to get into the market was 3 days ago, it's today, it was tomorrow. Because that's the only way that you're going to build generational wealth. And if you are crazy enough and kind enough sometimes to think that perhaps housing is actually a right, you should be purchasing right now, because very soon you will not be able to.
So that's excellent, because when I say housing's not a right, I'm not saying it's not a right. I'm saying it's a necessity.
Totally.
Right? Food, water, and shelter.
Yep.
And if you look at farmland, the major corporations own that. If you look at water production, the major corporations own that. So it only makes sense that the major corporations or derivatives of them will end up owning specifically the inner cities. I read one economist refer to it as the blue center of the target.
Correct.
And there's a big red circle around the outside, and ultimately that's where we're headed. Which then, to get into politics, like that, how genius were our forefathers to create the electoral college so that the inner city didn't do like Rome and tear down the country.
Right.
That's why I believe it will last forever.
Right.
Anyway, that's a different episode. A mentor of mine once told me that the United States real estate market will be exactly like the United Kingdom real estate market. We're just 20 years behind.
Yep.
So in London, if you want to live in London, you are either ultra wealthy or you rent.
Yep.
Like, that's it. And that's why when you look at their political involvement, right, now so many of the conservatives live in the outskirts because it's the only place that you can buy a house.
Right.
And you have to commute an hour and a half. And so I love what you're saying there, but Mesquite, Texas.
Sure.
Where I grew up. My parents bought the house that I was not born in, but lived in when I was born for $18,000 over by Rutherford Elementary School. They sold it for $80,000 in the late 80s and just thought, what a home run. No, $60,000, $68,000, something like that.
What do you think about 290 now, 320?
Yep. And I used the same example with that as Warren Buffett in the 70s bought a beach house in Laguna Beach for $150,000 and got a mortgage at over 8%. Because, interest is high at 5%.
Right.
Well, he ended up selling that home for $11 million.
Mm-hmm.
It's the same compound percent appreciation annually. He just started with a bigger number.
Right.
And that's what I keep telling you. And I love that you said, like, buy now because you're not going to be able to buy later. There will come a time, my wife Jennifer and I have been blessed to amass a portfolio of real estate, and there will come a time that my children are sitting around a bar or a church or a table or a couch talking about, can you believe they used to buy these houses for less than $1 million?
Yep.
Because the same thing happened with that Mesquite house. Over 50,000? You're a kid. Over 100,000? You're a kid. Over 200? They're crazy.
Right.
300? What a good deal.
And it doesn't have a whole lot to do with the amount of money that people continue making, right? There's always a wage increase. It's not catching up with the wage increase. So when I was down in Austin 3 or 4 months ago, I went down there with my wife to have a little bit of vacation. We stayed over in Travis Heights, right where the SoCo district is, right? And when we were walking around, I noticed a for sale sign. It was the only one in the area. And the home was a teardown, and it was listed for $1.2 million. That's LA, that's San Francisco. That's stuff that those people are used to.
Right.
We're not used to it down here. It happens so quickly that I think you're going to see a really big wealth inequality from people not being able to purchase real estate. Real estate is the main equalizer because it is one of the few things that you can get in and really own. And based off of the area, you can tell whether or not it's going to appreciate in value or not if you know what to look for. So I think if you know what to look for and you know the real estate agent to work with, I think it can really set you up for being the person that purchased in Salina at $275,000 5 years ago. I can't buy in there for less than $550,000. Right. I can't go over to McKinney and buy less for, let's say, $375,000, $400,000, and that's me really trying. I can't go to Van Alstyne, right, all the way up north. And at this point, I'm just following the Dallas North Tollway's trajectory. We haven't even talked about going down 30 where you hit Rockwall, right? Where now not only are you hitting Rockwall, but you're hitting Fate, Heath, and Royce City. And Royce City predicts such a housing boom that they're essentially adding on 100% of the amount of square footage that they have currently onto their already built high school. They know what's coming. And if you pay attention to what's going to come, you'll notice that you have to keep moving further and further and further and further and further away from your circle. But that's why Plano now is its own little city. It's like the Woodlands.
Yeah.
You know what I mean? Plano and Frisco are kind of like the Woodlands now. So people now are commuting to Plano and Frisco and downtown Dallas. You can live a little further out.
So let's take that thought process farther in the next segment. Because first, I want to ask you, one of my biggest fears to affordable housing is, I read a stat, 73% of active mortgages have a rate below 4%, and 90 or 92 have a rate below 5%.
Yep.
So now you have, I would say, the last of the boomers, and maybe, what are we, the X's, the Y's? I don't even know.
You're Gen X.
Yeah, I'm an X. So any X's or boomers, they're trapped by an interest rate almost. They can't, if you have a 4% rate and you sell and buy at a 5.5%, you're agreeing to trade down in housing stock, down in neighborhood, or you made a bunch of money and you're willing to pay, in essence, 30 to 40% more for maybe the same size house.
Right.
So I feel like it's going to bottle up what used to be entry-level housing, because, as you know, and I want to talk about this in a minute, a lot of that outward expansion had to do with life changes, right? You move out to the suburbs because you have the kids in school, and then you move back into the city because, you're an empty nester and you want to enjoy the things that you haven't been able to for 18 years of pain. I mean, raising your children. But I want to get into all that, and I want to know your thoughts. But we're going to take a quick break, and we'll come back. All right?
Great.
Stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm Tim Harris. I'm here with Lacey. And Lacey, number one, I would like to know your opinions on the interest rate thing I just talked about. But then also, I found it fascinating the way you talked about the DFW Metroplex. And as a national lender, I look at all these other cities. And before, San Francisco had the massive boom because they had geographic barriers, right? You couldn't keep building west, there's an ocean. You couldn't build south, there's a bay. So and then the same thing with LA, same thing with Denver and some of these other cities. But Austin, Dallas, we never had those geographic barriers. And when I start looking across the nation at places in Ohio, places in Tennessee, places in Florida, do you think the ability to expand is what's driving some of this population growth as well?
Yes. I think whenever we talk about ability to expand, it's really, does it make sense for a developer from a financial standpoint to expand, right? That's why we see things happening in a little further west, like I mentioned, Royce City. A little further north, I'm seeing stuff in Aubrey and Princeton now. And you're going to see a very large boom over in Denton. Hillwood is building something that looks very similar to Legacy West right over there, and I think that's going to be a giant boom. But to answer your question, you have to look at Dallas the way that a city planner does. A city planner looks at Dallas, you look at the map, and you see that the map is encompassed in a circle. And it's because all of our highway systems run in a circle. We have public transportation, but we don't typically use it to get from place to place. We are a car-centric city. So in order to build appropriately, you have to look at where the cars can go. Well, the cars can go in a circle, and the cars can go in Fort Worth in a circle. So what I've noticed is you will see an expansion based off of the circle. It's based off of a radius. When you hit, let's say, Plano up here, now that Plano is its own real city, right? It has their own shops, it has their own personality, it has their own very good schools. Now this becomes part of the circle. So now I can expand going that way. And that's when I hit Melissa, Salina, Van Alstyne. Now I'm hitting Little Elm. I'm hitting 380, right? Now that I've hit 380, once 380 starts being able to expand more north, then you will be able to grow again. You're going to see things in Bonham, in Paris, Texas.
New lake.
Honey Grove. Yeah, they're building a whole new lake. And let me tell you something. We talked about water. Bonham is running out of water. So if you purchase over there, the idea is to get a water meter very quickly because very soon they will not have enough to go around. Yeah.
Everybody talks about the politics of California are driving people here, or the taxation. My argument is it's simply affordability.
Mm-hmm.
I mean, I just feel like, and this is why I choose to be a housing provider. As our government showed us in the pandemic, we're going to make sure people can afford where they live. If it means we got to pay them money or give them rent credits or whatever, like, and the government did it in mainly in the Great Depression, right? Like, I mean, that's when the voucher system was really created. And so when I talk about food, water, and shelter, we're always going to make sure people can eat, always going to make sure they have water to drink, and we're always going to make sure they have a roof over their head.
Mm-hmm.
And so I kind of choose to hold my retirement and something the government's going to pay for if it gets really bad. What are your thoughts on interest rates in today's environment?
I think going up so quickly, we went up about 1.5% from June and July, and that really killed the real estate market for about 2 months. Everybody was really nervous about that kind of interest rate happening. Now that we see them petering back up slowly, we're seeing like 0.25% here, 0.25% here. We lowered them slightly in January, but the Fed has been very honest with what they plan on doing, and they say that they're going to be increasing. They say they're not going to be doing the big jumps like we saw before, but until we really curb inflation, they are not going to continue. They're just not going to come down. But to your point about individuals who own at this lower interest rate, I mean, hey, if I had a house at 5 or 6% and all of a sudden I could refi at 3, you better believe I refied. So not only are people feeling locked into their rate, but people are not going to be selling. So now you have to deal with new home construction in order to get the best price and realistically the only house. In the market that I'm in right now, which I sell a lot in East Dallas, I go up, we go south, we go to North Oak Cliff. That tends to be the primary area, though, is East Dallas and North Oak Cliff. We are in multiple offers every single time. Every time. If it's priced correctly, I'm in a multiple offer, and it's because there's nothing on the market. Because if you're locked in at 3.5%, 4.5%, 5.5%, why would you sell?
Well, and even, yeah, I mean, right. And even if we were still at, I think we saw it happening, even if we were still at 3.5%, values have gone up so much that if you sold the house that you'd paid 80 for, yeah, you would clear 200 grand, but you're putting the 200 grand down and you're taking out a $300,000 mortgage and you can't afford it.
Yep.
So when I look at existing inventory, that's what not scares me, but scares me about the future of the housing market, because we're 7.5 million units short nationwide right now. Mm-hmm. By the way, you were talking about listening to the WMF, World Economic, WEF.
Yeah.
Is it? Yeah. I'm a nerd too. I listen to Bloomberg Radio.
Yeah, me too.
All morning, every morning. I love it. No politics, just data. Give me data. The thing that scares me about the housing market is we're massively undersupplied, and short of the government starting to build projects again, which scares me,
mm-hmm.
we either have to give builders major incentives, which I, again, am against incentives in a capitalist society, but something's got to give. If we don't start creating more shelter, every day there's more humans, and The train's on the track, and I think we all see the light.
Especially in DFW when you talk about major job growth. I mean, DFW is the largest growth market outside of Florida. We barely are doing better than Tampa. Tampa's crazy right now. But if you look at places that have done, in my opinion, as someone who lives in Texas and doesn't live where I'm about to talk about, that has done a good job, I think Philadelphia did a very good job. They gave a 10-year tax abatement to new home development if they were going to use it for housing.
Really?
Yes. So they gave 10 years off. That abatement begins when you pull the permit. Now, starting this year, it's 90% abatement. The year after that, it's 80. The year after that, it's 70. But it continues being for 10 years. So when I go sell to you, you get that abatement transferred.
Right.
Which, if we could, I mean, geez, right? Like, our taxes here are so insane.
Oh, yeah.
If we were able to do something that would at least help the builders out, I think then you would see more people at least trying to jump into construction. I think everybody freaked out and has now decided that they can't afford the notes because all the loans are at prime rate plus 1 or 2, right? So now they're at 8%, but if the value isn't sitting at 8% extra, they're really not going to try to sell anything.
It's the old cart before the horse. And then I watch cities like Dallas, and I watch cities like, frankly, even Rockwall, where I live. They're so anti-development because it's a double-edged sword. I mean, you want to keep homes affordable, but if you don't build more homes, the law of supply and demand says that they will not be affordable. I mean, and I just find it's fascinating where we're at in this market cycle, and it's almost scary, the boom that I feel is coming. Because eventually, as you know from our short history as real estate professionals, because we're young, a 5% rate is not bad.
Right.
And eventually that shock of, oh my gosh, it's not 4, it's not 3, will wear off. And I think we're going to be right back where we were, but just at 5% interest rates instead of 3.
Yeah. Yeah, we call anything less than 4%, I call it like a Fugazi rate, right? Like it's fake. It's not real.
Right.
And I think once people understand that this is just kind of the new normal, and the goal really is to purchase something. You don't want to overpay for it. You want to look at something that is sold in the last 90 days for comparable value, not 180 when the market was very different. And you just have to really know what you're looking for as far as places that will see equity growth, which is really based off of location and based off of whether or not the development has their own school system. Because one of the reasons people move to DFW, aside from the fact we get great jobs, right? It's cheaper to live here than it is almost any metropolitan city. It's also because we have really good public schools here. And you'll notice that whenever a master plan development comes in an area that typically does not have good school ratings, they will always build an elementary school by the 2nd phase. Then they build a high school by the 5th phase. And then by the 7th phase, there's a middle school.
Really?
Yep.
I hadn't looked at that, but I believe you.
If you notice it and all of a sudden you're like, man, I can move over here and I can let my kids walk to school, that's mind-blowing.
And they'll actually make it back?
Yeah, they'll make it back and they'll get a good education and I don't need to pay for private school.
Right.
So now all of a sudden my whole family is happy that I'm moving here. There's stuff to do here. I know that if I go to, let's say, Little Elm, if I really like the water, I can make my kid learn how to go wave surf over at that Red Bull park.
Right.
That's sick. Right. Show me another place where you can go do that and then go to Universal Studios in 4 years and then go over to NRH2O and then go over to the Nerf facility over in Denton. There's nothing else like it. It's such a great place to raise a family.
I took my youngest son to baseball tryouts on Wednesday night in Parker near the South Fork Ranch. And on my way back, I happened to drive through downtown Wiley for the first time in probably a year. What a cool place.
Yep.
There's all these restaurants and bars and lights, and it's a Wednesday night.
Yeah.
So I called Jennifer. I'm like, hey, when he goes next week, let's just go with him and you and I can go grab dinner downtown Wiley. She goes, downtown Wiley? He looked cool.
Yeah.
Like, so I want to know, do you advise investors different than you advise homeowners on where to purchase?
Yes.
Can you tell me why and how?
Sure. I mean,
teach me, Lacey.
It really depends on what the investor is looking for. Some investors want to do long-term rentals, which tend to not do very well here. They don't mind writing themselves a check for $50 or $100 a month. Their goal is to get equity. So when their goal is to get equity, I take them to places like Royce City, Fate, and Heath, mainly Royce City right now. In about 6 months, I'll start taking them to Princeton. That will look like Wiley pretty soon. I take them to Aubrey, Little Elm, Savannah, and then the west side of Fort Worth and the Magnolia and the Historical District, because those areas typically grow at a rate of like, they always beat inflation. So last year, inflation was around 8.5%. This beat inflation by 20%. I'm not saying that's going to happen again because it sure won't, but I would expect to see something like 10 to 12% because they're chasing after new home values. So as the builders come and build their houses, they sell them for $5,000 more each plan. You are chasing that equity growth. Your goal is to be there by the second phase, so that way you can enjoy the equity growth over the next 6.
So I remember Jennifer had some customers that had bought like D.R. Horton Expresses in Royce City when they, like phase 1, right?
Yeah.
And by the time they were done with that development, they literally sold the house for twice as much as they paid.
Yep.
And I just remember thinking, oh, and by the way, they were then told they could work from home permanently, so they took all that money and moved to San Angelo,
right,
where they bought, I guess, 3 mansions.
Yeah.
Because it's San Angelo.
Yeah.
So that's interesting. So whereas with a homeowner, how do you kind of talk to them about where they should look?
I think it depends more on where they work and what their vibe is.
Right.
Right? Like, you don't get the same, typically, the same people who enjoy activities that are activities that you would enjoy in Fort Worth are very different activities than you would enjoy in East Dallas, right? Typically, it's based off of school system and what they've heard in the past. It also is based off of vibe. Do they want to be able to walk someplace, 5 minutes to someplace? Do they like Bishop Arts if that's the case? Or are they looking for something a little bit more developed and they like Lakewood a little bit more? And then it depends on what type of homes they want. If they want craftsmen and they're in $1 million price point, let's go over to the M Streets. Let's go over to the L Streets, the Bird Streets. Let's take a look over there. If they like rolling hills, let's go over to Fort Worth. Let's go over to Kessler Park over in North Oak Cliff and really see what the difference is. They're at 350 and they need to be close to Fort Worth, North Richland Hills, and Birdville ISD, because it's the second best ISD over in that area.
Right. So we're going to take a break, and then I really want to talk about that because I think as an investor, you have to train yourself to look 10, 15, 20 years down the road and kind of figure out what vibe is where you're at and what's it going to have 10 years from now. So stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-vest.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harris. Thank you for sticking around. Lacey, I want to dive straight into the next segment, which is the Money Minute. So imagine there's an entrepreneur, an investor, a would-be home buyer out there, and they're only going to get 60 seconds of advice for the next 30 days. So this can be about real estate. This can be about life. This can be about financial planning. Some people take this like they talk to the younger self. They're like, Tim, listen, like, so think about it. 60 seconds, the best stuff you got. You ready?
Yep.
Go.
Instead of thinking about house hacking with an FHA loan where you buy a duplex and live in it and have somebody else rent it out, don't do that. Your goal really is to purchase a house that has as many bedrooms and bathrooms as you can afford, and then you house hack that with your friends. Your whole goal here is to essentially lease out each bedroom for $1,000 to $1,300 a day, or I'm sorry, a month, and then anything that has a connecting bathroom, you're leasing out for $1,700 to $1,750. You do not stay inside of the master bedroom because that bedroom is the most valuable. You lease that bedroom. That will always make you more money than doing a regular long-term lease, period.
So you just told people to basically be pad split.
Yeah.
Which is a cool concept. And I was talking to the CEO the other day, and I find it interesting. There's so many working class people, young people, even in their 30s, that they just can't afford rent. And if they're going to pay $1,200 a month to stay in a 3-bedroom apartment with no yard and frankly, no character, why not stay in a nice house that you're with your friends?
I'll tell you what, too. Find me a place in a nice area that's $1,200 a month. You know what I mean? Like there's no way. And so the real goal here is to essentially turn any room you can into a bedroom. If it's a dining room, it's right next to the kitchen. Great. Guess what? Now you have a bedroom with a tiny bath. That's the whole goal.
So how long have you been in real estate?
I've been licensed since 2010.
Okay. Are interest rates high right now?
No.
How long does it take to recover from the shock of the quantitative easing that was necessary after the pandemic and probably went on 12 months longer than it should have?
I think we've eased.
Yeah?
I do. I think what you saw were a lot of people who were just starting to enter the market, right? You saw a lot of millennials, a lot of Gen Zs, and all of a sudden they had the money saved up, but they had friends and family that had 3% rates. We also, so I'm a millennial, I'm 35, and I graduated in 2009. So I think a lot of people in that age range were still very concerned about another market crash because it happened right when we were 20, 21, 22. So now that people see that really isn't going to happen, you'll see prices chill out. They've already done that. Now we're starting to see them amp back up again, and that's in every major city. That's not just Dallas. I speak with about 15 other real estate agents in different parts of the country, all within Compass. They're all top producers. They all say that they're seeing the exact same thing.
Where is the opportunity for investors in today's market?
The opportunity is, again, not in long-term rentals. It's in midterm. It's in short-term, done correctly. And it's also done in house hacking that I just explained a second ago.
Done correctly. I love that. Tell me a little bit more about that.
Airbnb, much like a Dallas restaurant, needs to be a niche experience. If you do not have the money, typically $30,000 to $50,000 extra to put into that niche experience, you will not rent very well. It either needs to be that, or I think the next best thing is going to be tiny homes about 90 minutes outside of either Dallas or Fort Worth. No more than that because people won't want to drive, but you need about 500 square feet on, let's say, 8 acres. I think all in, that's probably about $265,000 if you do it right. Yeah, and that's...
Can get away kind of cabin type feel.
A-frame, globe, container home, tiny home. Those are all things that you see now in the new homepage of Airbnb. So your goal is to really go for what Airbnb wants you to be leasing, which is it's experiences. So if you're doing that, I'm seeing people with just one house grossing about $110,000 annually.
So we have, and next time you're in Rockwall, you need to hit me up and I'll take you over. So we bought this 150-year-old house. It's the second most historic home in Rockwall. It's a Victorian, 3/4 of an acre, a block from downtown.
Oh, that's awesome.
And Jennifer just did a bang-up job. She spent a ton more than $50,000. But we're getting $500 a night for it.
Yep.
And the average Airbnb is like $150 a night in Rockwall. And I talked to managers. They're like, your expectations are way out of line. I'm like, I get you're looking at AirDNA, but could we look at the house, the experience, and we're getting people wanting to rent our house for a week so they can hold a bridal shower there in October.
Yep.
So even though Historic Commission, we're not holding events. Yeah, that's been a fun experience.
I get it.
But I completely agree with you.
Yeah.
And the midterm in Rockwall, we are crushing it.
I believe that.
I've got a house that if you ran a CMA on it, you'd be at $3,200 to $3,500 a month. We're at $12,500.
That's awesome.
And
Yeah.
at that
But
number,
that's what it should be.
I'm happy to let it sit vacant.
Yeah.
Because the people that move in, it's either they had a fire, a tornado, or a big water leak, and their insurance company's paying for it. And they're paying for it because they would have to get them 3 hotel rooms and pay them a per diem somewhere.
Yep.
So now you get to move the whole family in. Oh, and they'd have to pay to board the dog, too.
Yep.
So, and then every now and then we get the person that, like, the wife kicks him out and he needs to find a quick place to live near Heath, near the kids.
Yep.
But, yeah, I mean, so we're getting $8,000 to $12,000 on houses that Airbnb say, or AirDNA says we should get $125 a night for.
Right. And AirDNA is fine the same way that his estimate is fine, right? But if you really want to dive into it, the whole deal here is that it's experience. And typically people who do really well in Airbnb are service industry people, because you have to have some sort of mentality about
Hospitality business.
It's hospitality. It's your whole goal is to drive people away from staying at a hotel, whether that's price, whether that's experience, whether that's cleanliness, whether that's location. It has to be all four. And the second you don't have all four, all it is price.
I completely agree with you. That's awesome. So midterm, short-term done right. What else did you say? You said midterm, short-term done right.
And house hacking.
Oh, and house hacking.
Yeah.
Yeah, I've been looking. I heard that Mark Cuban invested in Pad Split.
Okay.
And I've been looking at that, and I was talking to the owner, the CEO, and he was like, Tim, so many of these nice houses or nice areas have good people that need a place they can afford close to home.
Yep.
Or close to work. And when they can pay $800 to $1,200 a month, and utilities included, and live in a nice house near their job, because if you're a server in Rockwall, where are you going to live?
Yep.
So, yeah, I mean, I completely agree. I do think that's the way of the future, and because it's going to be very difficult if you're not, the longer you wait, it's going to be very difficult to cash flow houses inside the top 20 MSAs, which is, I'm going to help you wrap this up because that's where you started 30 minutes ago.
Sure.
You were like, these top 20 MSAs are going to become increasingly difficult. If there's anybody out there that heard that and is still listening, what if they'd say, golly, I think I need to listen to that? What should be their next steps? Maybe you can do 2 parts, homeowner versus investor, or you can combine the two. If they're out there, they hear you say that, they agree with that, what should they do next?
As an investor, I think it depends on how much capital you have in order to invest appropriately. If you have enough capital, do Airbnb. It'll treat you right every single time. But if you don't, I would then go into midterm rental or a true house hack where you're actually living inside of it and then renting out the rest of the rooms. It has to be close to an office, and typically no dogs, no pets, no kids, no wives or husbands. It needs to be single people who live there. They go by month to month. So that way, if you have a problem tenant, you can kick them out really fast and not ruin the experience for everybody else. It also doesn't lock anybody in. People like that. If you are deciding to go out and buy your first property and your goal is to make, and it should be, by the way, your goal should be to get into a Toyota so that way you can get into a Lexus, so that way you can get into a Maserati, okay? You want to buy the thing that's $300,000 to $350,000. Go to a master plan community that will give that to you so that way you can follow the pace of the growth. That is always the fastest way to do that. Even people that go and buy, let's say, townhomes, they buy the first townhome, they wait until the very end when the very last townhome is sold, and they sell it. And it's typically for a profit of $100,000 to $135,000.
So there's a lot of people that say prices are too high right now. I'm going to wait for them to come back down. What's your response to that statement?
Good for them. Good for them.
Is that passive aggressive?
Good for them. I understand the thought process, but that is a thought process based in fear. That is not a thought process based in fact. That is the truth. That is not me trying to sell anybody. That is me very honestly looking at the market and saying, okay, we're going to probably raise to 6.5 by the end of the year. We're already at 5.5. Be at 6.5, 7.5, and then the market will come down again and everything will cool. I think you'll see things that have already started cooling. If you're looking at a home that has been sitting on the market for 30 days, you can get a darn good deal. But everything else, when they're priced appropriately, are selling very quickly. And I think we're in multiple offers again. It's rough.
I'm with you. So you mentioned you're part of a nationwide network of real estate agents as part of the Compass Real Estate is it real estate company, real estate group?
Company.
Just company. Compass. If someone's listening, they're like, you know what, I would like to work with Lacey or someone smart like her. How do they reach out and get in touch?
Sure. They can reach out to me on Instagram, or my Instagram is the same as my TikTok handle, which I know you follow and love. It's at Lacey, Lacey .compass. And if they'd like to email me, it's Lacey, Lacey, my last name, Brutschy, which is BRUTSCHY, at compass.com.
So we'll put that in the show notes. And if you're not in the Dallas-Fort Worth market and you would like a referral to someone that Lacey knows, likes, and trusts, I'm sure she'll be happy to do that as well.
I sure would be.
So thank you so much for coming. Jennifer, this may be the first episode she actually listens to. I love you, honey.
I'm glad I can help you with that.
You'll make my wife a fan of mine eventually. But no, for real, thank you for coming. Thank you for putting out the great content you do. Follow Lacey on Instagram and TikTok because I love that it's real. It's not fluff. It's not fear. It's not sunshine. It's just real. And it seems like it's data-driven. And as we discussed, I'm a bit of a data nerd. So
Same.
Thank you for being here. And we are out of time. Thank you for spending your time with me again this week. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.